A rate cut is widely expected at the Reserve Bank of India's next credit policy, and Bloomberg is expecting about a 25 basis point cut. The market is already discounting it, and while businesses are figuring out its impact, we today are talking about what it means for you, the Aam Aadmi, the householder, the saver, and the person who's looking for their next loan, be it a home loan or a personal loan or a loan on your car or your vehicle. So I'm joined today by Harsh Roongta. He's a top financial advisor and personal investment expert to talk you through what this rate cut, if it happens, means for all of you. Thank you so much for speaking with BloombergQuint, Mr. Roongta. Pleasure to speak with you again. A 25 basis point cut is widely expected. If that happens, it's safe to assume that FD rates will go down. The State Bank of India has already dropped the interest rates it gives on its savings account. Does it make sense to look at a fixed deposit as a saving instrument right now, because it is still one of the most popular ones?
Well, I think fixed deposit makes sense only for people who are absolutely risk, who don't pay too high taxes. I don't think it makes sense for anybody else at all. So I think, my God, can we do that again? Is that possible?
We're on Facebook right now, so you'll just continue. That's all right. These things happen. But just to talk about why you're saying FDs don't make any sense with the interest rates we're looking at right now. And of course, you save taxes on the return if your fixed deposit is locked for more than 5 years. But you're saying even then it makes no sense?
Absolutely not, because I think fixed deposit by definition gives you a return. Not right now, of course, the returns are higher than inflation, but typically fixed deposit returns are gross returns are close to inflation. And because of taxes, the return slips below inflation. So in fact, if you deposit in a fixed deposit, then you're guaranteed to lose money over a long period of time. So I think fixed deposit is good only for the a small amount of money that you may need for an emergency, etc. Even for that, there are plenty of other options which do not are not that tax inefficient. But for people whose taxable incomes are not very high, even for them, it is the short-term emergency monies for which fixed deposits are good, because the interest rates are very, very low, and they're going to get lower if the rate cut actually materializes.
Okay, and in what is looking like a falling interest rate regime, then what options would you advise for small investors?
So I think the advice is basically every investor has to look at his overall portfolio. There will be a portion of his portfolio that he needs for long-term needs and to which he will add every year. Obviously, for that portion of the portfolio, depending on his ability to take risks, he should be looking at equity. I think if you want to beat inflation, equity is your best bet. It works excellently in the long term. So I think for the long-term portion of your requirements, equity is what you would need. The proportion may change. For somebody, the proportion may be 50, 60%, 70%. Somebody very aggressive, it could be as high as 90%. For somebody much less aggressive, it could be 30%. But I think you need equity for your long-term needs. I think for any other needs, you would need a mixture of equity and debt. If you have a very large portfolio, then again, for some part of your long-term needs, you might have a proportion for real estate.
Let's talk about the other side of the story. While your fixed deposits might get less attractive, your savings rates are going southwards, but your interest rates on your loans are also hopefully going to get cheaper. So is this the right time to go in for that loan, be it a home loan or a personal loan, or especially with something like a home loan, do you think it's wise to wait for a little bit more?
So I think the right time to go in for a loan, a home loan, for example, the right time to go in for a home loan is when you want to buy a home. So I think the real question is this the right time to buy a home? And as far as buying a home is concerned, which is a place where you're going to stay yourself, I think every time is right. So, I mean, as long as you have a commitment to a city, you have the ability to make the down payment. I think you should buy your home right now. I think you could maybe wait 15, 20, 30 days once the whole RERA thing settles in. If you're thinking of buying under construction, then I would say wait for 15, 30 days till the RERA thing settles down. If you're planning to buy ready to move in, then of course you should go ahead and buy immediately. Great deals are available. Home loan, even if home loan rates fall, technically they are supposed to fall for you as well because they are floating rate loans. Unfortunately,
Yeah, exactly. Coming to that point, technically they're supposed to fall, but the rate of transmission to the actual consumer is so slow. So how does one ensure that they're getting the best rate, whether they're taking a new loan or have an existing home loan?
so new loan typically you will get the best loan because you will shop around. I think the real issue arises when you already have a loan. I think that's where, as they say, eternal vigilance is the price of liberties because it's a free market. I think banks are allowed to charge more to their existing regulations are extremely weak. Whatever regulations exist are implemented extremely weakly as well, and therefore there is no choice but for the consumers to be extremely alert. Uh, when your bank is offering loans to new clients at a new borrowers, if they are offering it at a lower rate, you go out and ask them to reduce it for you, refuse to pay a fee. If they don't reduce it for you, shift your loan. A little bit of effort, a simple effort of sending an email to the address given in your home loan documentation saying that you want to shift the loan might ensure that they will drop the rate for you, but they will not drop it on their own. So I think please make sure that you are alert enough to make sure your rates get dropped.
Okay, so that is one very important point as far as your home loans are concerned. But overall, if you're looking at the impact of a possible rate cut on borrowers, what would you advise at this point?
Sorry, what was the
What would
question?
you advise borrowers at this point who are looking at all kinds of loans, not just home loans?
Um, I think right now we are in a, I mean, easy availability. Retail loans is clearly a buyer's market. Very clearly. I think every bank is scrambling to build a retail book. So please shop around. When you are a new client, new borrower, at least at that time every bank is vying for you. So make sure that you shop around and get the best deal. Obviously, I mean, fixed rate retail loans, except in car loans and in unsecured personal loans, fixed rate loans are unheard of in home loans. I mean, they're just too expensive. They're
Yeah,
just
it makes no sense.
artificial.
All right, thank you so much, Mr. Roongta. So shop around for your loan. If it's a new one, if you're an existing customer who has a home loan, then make sure your bank is giving you the best deal. You'll have to get maybe a bit pushy about it. Write that email, go and meet your manager and say, hey, I want a better deal and I'm not going to pay a fee for it. That was Mr. Roongta's advice. And hopefully a lot more coming in once we have an announcement about whether those rate cuts are coming through or not. Thank you so much for speaking with BloombergQuint, Mr. Roongta, and you stay tuned to us for all the latest on the credit policy.